right, let's get going with the homework.
Okay. So for the exercise this week, I just selected Tesla as one of the ones where I wanted to kind of have a complete view with both the gaps and the demand and supply zones identified. So in red, what I have is the supply zones, kind of this light red slash kind of like salmon pink color. And then kind of this green color here, it's the demand zone. And in yellow, that's the gaps that I was identified. So just wanted to show kind of a macro view first of where we are, in terms of like this is still so far still an upward move. The 78.6 hasn't been broken yet on the monthly, so technically, we can't say this is a downward move, but we still have a downside bias with everything that's going on in the market and the economy. So keep that in mind, but we still haven't crossed the 78.6 down here, which would be around the $40 range for that. So now that we have a good macro view, let me jump into the daily to kind of talk a little bit more about the demand and supply zones that I've identified. So what I try to do is I try to go back because I'm kind of tracking everything in relation to pre-COVID highs, right? Because that's where kind of we have a bias to say probably this is going to come somewhere close to the pre-COVID highs before we see a reversal to the upside and making new highs. So what I did is I try to go back kind of relatively as close as it makes sense to the pre-COVID high. So when I was looking at this, the first gap I identified was right here. Again, this is far below, so most likely if Tesla's at $20, we're going to be in some big trouble. But I still want to just go ahead and draw it anyways, because one, it's kind of a gap before the pre-COVID high, and it's also kind of close to this demand zone that we have here. So I just wanted to draw it just so I don't lose track of it when I'm looking at the chart, especially if we're kind of like this. It'd be easy to kind of not forget about this one. So as we kind of go here, I identified this as a demand zone. I actually also identified this as well, but as we kind of talked about previously, if this kind of gets in this general area more than once, and it does kind of in this area as a consolidation, I just deleted it, so I didn't count this.
Let me pause you there for just a second.
Okay.
Please draw it, because there's a very important point that we need to talk about.
So
yeah, so when the second green bar to the right of it,
this one?
no, the second green bar, that's too far. No,
Too far right here?
yeah, right there. When you get to
Okay.
that green bar is when you have potentially identified this demand. So right, everything to the right you can't see. So when you get that pop, you say, okay, I have identified this demand zone. Even I would hide more bars. Yeah, so right about there is where you say, okay, this is a demand zone. So it's very good that you mentioned it, and you've identified it right. Now, as you slowly uh, go day by day, right to the right, you keep going, and then boom, you hit that demand zone. That's
Yeah.
where you hit it, not where
And
you said you hit it.
yeah.
Right? This is why I wanted to point this out. Is it has already happened,
Yeah, kind of
and you went
here.
below it, right? You went all the way below it for a few days. If you just keep going, if you
Yeah.
just keep scrolling, you will see you've blown through it,
Yeah.
right? So at that point, you know that demand zone is no longer valid.
Yeah.
You ignored that whole middle section and said, "Oh, I hit it here." because you want it to go up and come back to it, right? So, yeah. So once you go below it, it could be a supply zone, right? You could leave it there as a supply zone for
Mm-hmm.
that section, but then you blow right through that by creating a gap,
Yeah.
right? So I
Yeah.
wanted to make sure you understood that piece, right? So it's a few days later is where you've already taken care of that demand zone. Once you go below it, it's no longer a demand zone, right? It's
Mm.
done history. You
Okay.
you only wait for like 2, 3, 4 times if you
Mm-hmm.
remain above it. You come down, go up, come down, go up. Then you can say, I'm going to keep it. I'm going to see how many times they're going to hit it. But once you blow through it, it's done. It's no longer a demand zone.
Mm-hmm. Okay.
Okay.
Makes sense. Okay. So with that in mind, identified this demand zone right here, a couple gaps as we kind of go.
So keep your mouse where it is right now. Just the mouse, just right there. Oh, you moved it on me. What's
Oh,
that? Okay, that's fine. That right there is fine. Where
okay.
Okay, so you see that consolidation area right before the
This one,
mouse? No,
this
before.
one,
Yes,
this area right here. Yeah.
yes. Uh, why wasn't that not a demand zone?
Uh, Good question.
So let's just do a quick refresher. For demand zone, it's
Mm,
drop price, right? So that's that area where it forms a V is a demand zone where you have it right now, like your demand zone that you've drawn.
this.
No, where you have already drawn.
Oh, this. Yeah.
Yeah. Identify that one, right? It's drop,
Yeah.
immediately
The V.
rise,
Mm,
right? Okay, so that's one. The other one is drop, consolidate, that's two. And the third one is rise, consolidate, rise. So don't
mm,
forget the rise, consolidate, rise,
okay.
because that becomes an important demand zone. That tells you that there was a lot of fights between bulls and bears for a while, and then the bears won. But when they won, they have uh, most likely additional positions that they want to hold, but they don't chase.
Yeah.
So critical to identify rise, consolidate, rise is also a valid area.
Mm.
Drop, consolidate, drop, another area for supply zone.
So would you would you draw it from here
That whole
from the open,
consolidation area.
just like this?
Yeah. No, that's too far.
Like that.
Yeah. Kind of like that. And I would go a little bit higher
Go
because that
higher.
consolidation, well, that
Or-
consolidation area is that whole box, right? So that's how I would draw it. But again, there's no specific formula, right?
Mhm.
It's just a way to look at it. Is to pay attention what happens to price next time it comes there. This is what I'm interested in.
Yeah.
That's why I keep it there.
Okay. That makes
Okay.
sense.
So again,
Okay.
as you've identified, so if you stay in that vicinity, you have two gaps right after that,
Mhm.
and then you have that drop where those 3 bar drops, and then you have a rise.
Yeah.
And
I want
again,
to
I
scroll.
think it's important to keep those in mind.
Yeah. So would this be another, I guess, demand zone right here?
Yeah, I mean, you can say it's that whole consolidation area, or you say, well, I wait for that last piece to be formed. Yes. Remember, with demand zone, there's also the idea of an order block, right? They will take the price down before they take it up.
Mm-hmm.
So you can identify that area as like, okay, here's what they just did.
Mm. Okay.
When you initially opened up your chart, I saw you had just one demand zone and multiple supply zones. So I kind of figured this is why you were missing them.
Okay.
Again, right where your mouse is, that red bar. No, more to the right. More to the right. Where
This
it
one?
drops. Where it drops. At the
This?
bottom. At the bottom.
Okay.
Yes.
Yeah. This one I didn't draw because there was a hit it right after.
It depends on what you consider hit, but if that's the formula you're going to use all the time, yes. But it can't be half
Yeah.
the time you say just touch is good, and other half the time you say no, I want to go to the halfway to the bottom. You gotta stick to your formula, right? So
Yeah.
yeah,
For
I
this
can't
one,
say you were wrong. I'm just saying just have
yeah.
a formula that you follow.
Okay. Yeah,
Okay.
definitely.
Okay.
Um, okay. I guess, yeah, as I look to the right, this would be another one, but again, based off the way I would write it, this would also be another area, so I didn't draw that consolidation
Yeah. Yeah.
right here.
There's a
I
lot
didn't
more, even
even
to
here,
the left.
here, here,
No,
here.
no, no. Those are already touched, right? So if they touch, I'm
Maybe
not worried
these.
about that. The
Yeah,
consolidation before that, and not below,
this, this one,
not below. Yeah,
this.
that consolidation area. Remember, rise, consolidate, rise counts.
Um, I just figured it was closer to. So, first you have this one, then you have this one right next to it, and this one, and then you just blow through it. So
Yeah, so why not the last one?
because you already had it 2 times. So we
Two
say,
times from where? Let's draw it. When we say that. So I want to see what you mean by 2 times.
so like if I do,
No, that doesn't count, right? Because you've already blown through it.
yeah.
So
What do you mean?
well, if you look at the
What do you
red
mean
bar, it went through
right
it,
here?
right? Yeah,
Right here?
yeah.
I just thought this would be another like it went up, they already took it down, collected even more, and then this, and then collected even more, and then now it's shooting up. Is kind of how I read the chart here.
Yeah, it's valid, but I would prefer the lower red as your demand zone because that one is just uh, too close to why it's still within the consolidation. And if you go to the right, no, stay there. Yeah, right there,
Mm.
right there. That's where I would prefer to draw it. That's what I would prefer to draw it because the other one is, as you can see, you didn't make a new high. So
Yeah.
that tells me you're still within that consolidation.
Mm.
Right? If you look
Yeah.
to your left, you have a high to your left.
Yeah, this one.
But this one that what I mentioned, if you draw the way I'm drawing it here, you're making new highs, right? Price is going up from there. Price is making a series of higher highs from that low. But the previous one you have drawn, price is actually making lower highs.
Yeah, this one. This one.
Yeah.
Yeah.
Right? Because remember, you're not drawing demand zones on the day, right? You're waiting for price to make a move in one direction
Yeah.
or the other. So you've probably waited about a week or two and say, okay, now I see where this up move started down here. It could start at a V after a pullback. It could start at a consolidation.
Mm.
The one you drew previously, there was no up moves that started there.
This one.
No. The one where I just had you move.
Oh, this one. Yeah.
Yes, yeah. That one, there's no up move, right? So
Yeah.
a a fib you're drawing as soon as you can. But
Mm.
supply zone, demand zone, let it play out. because it's not like, oh, we have a demand zone and a day later I'm going to come back to it. If it does, it's okay. You missed that one. That's not a big deal. Why we want to identify these demand zones is a few days, a few weeks, a few years later, what happens? When price comes back, and I mean, you can do an exercise where you go back in time, like take the SPY and go back like 10 years, 15 years, and identify these zones. And then whenever there's a crash, it stops somewhere. And you can say, why did it stop here? Because there was some demand zone somewhere. Right? That's a very likely scenario. So that's why you wait until the move has happened, and then you draw your zone.
Okay.
So if that day, what was the day that this box starts? That's October 30th. So you're probably in the middle of November when you draw this box.
Yeah.
Yeah, you even past middle of November, because you want to confirm we're in an up move.
Yeah.
Right? Yeah, because that's when you have a new high. Otherwise, anything to the left of that is a consolidation area.
Okay.
Okay.
Would you consider this close enough right here? The dip from here to here?
Again,
So it did this. It's a
it,
lower.
it depends on what your formula is, right? For me, the barely touching is not enough. I want to see price go inside that box.
Okay.
Yeah.
Sounds good.
Even if you consider that good enough, then I would move that box to that area.
Sounds good. I'm just zooming out real quick to see what's to the right, because sometimes this is why I deleted it. I think because I did draw some, some of these I drew them, and then because I was going through from here to the right, and then if it hit it again, obviously here it just blew through it. I just didn't count it. So I might have drawn it previously. I probably just didn't draw it.
Yeah, it still counts, right? Because it gave you an indication.
No, like, yeah, it still counts, but it's no longer in
yeah.
effect since it's
Yeah.
we're here now. So that's what I meant.
Okay.
Would that be the right way to think about it, right?
Yeah, yeah. Once you blow through it, then it's done, right?
Yeah, exactly. So I think that's why I deleted them, because we
Okay.
blew through.
Okay.
Yeah,
Yeah, you
there's a
have a
lot.
few. Yeah, there's a lot like that.
Yeah. Yeah, so it was a lot of times I would draw it and then I see, oh, like years later you hit it. So it's like, okay, no, it's no longer in effect.
Okay.
So a lot of them are in that category for the demand zone, just because right now we're on a sharp decline, right, from where we were. So there's a lot more supply zones because we're kind of just doing zigzag downwards.
Yeah, and we're blowing right through them.
Yeah, like it's a sharp decline.
So do me a favor, go slowly to the right with your mouse. Just your mouse. No, slowly. That's too fast. Slowly. Yeah, I want you to go just a couple of days at a time. A little bit more, like to the bottom of that pullback. Right there. Can you draw one there?
Sure.
It doesn't have to be precise. I just want you to draw. Just that's close enough. That's close enough. And so now when you zoom out, or okay, see what happens there when price touched there. The next time it came back, it bounced, right? Yes, it's short-lived, but you know there were some orders there. They did not survive for long, but there were some orders.
Yeah.
Or the orders were not institution orders. Those orders were institutions knowing people are going to take a chance right there at that demand zone, and then they'll let them take a position, and then they wipe them out. Yeah. And then after that, they let them take the downside position. If you where yeah, they let them take that downside position right there, and then they wipe them out, and then they take the price down. Right, so that's where you see a lot of that manipulation.
Yeah, that makes sense.
Yeah. So I can see that price bounce from there. That's why I wanted you to draw it to see a good
Yeah,
example.
yeah, no, I can definitely see that. That's a good one.
Yeah.
All the rest, pretty much, since the price is pretty
Yeah.
much here now, they're all going to be blown out, right? So I didn't realize it when I was going through it, but now, after I finished it, I was like, oh yeah. I mean, if there's anything below the current price and we're kind of in a downward trend, they're gonna all get blown out. So I deleted pretty much all of the ones I had because I had like a lot here, 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 here.
Yeah.
There's so many. So, but because of that, there's a lot more, obviously, those supply zones. So I'm happy to walk through those.
I think general idea it's good. I mean, you've identified them well. I just like if you see you have four right now. So look at the
Yeah,
fours one.
this
Yeah,
one,
go. So if you go below, you see where price pops up.
this one.
Yeah, right there. Was that drawn and then you see, oh, I've already reached there? Is that? Yeah,
Yeah, it was right
yeah.
here.
Okay.
So it was right here, and then it was here, here, twice. So I was like, okay. But
Yeah,
then
even three
uh,
times.
3 times. With this one, I was like, it's far enough that I was like, you know what? Let me just keep it. And I was actually going to ask you, like, how many times is enough? Because it's not like, not immediately. So I saw the first one, and then this one, it makes sense. Like, it'll be manipulation, right? Where they hit it, and that's why resistance. They try to take it back up. People buy, and then they take it down, and then they, take it down even further. But then it pops back up. So I'm like, maybe this is enough has happened that maybe this is another supply zone that I should draw, and I just drew it. But would love to get your thoughts too.
Scroll to the right a little bit more. Let's see. Um, it's a bit tricky that one as a supply zone, right? It's always not a bad idea to leave the last one, uh,
Mm.
just to have a point of reference. But usually, once they hit it 2 3 times, I'm done with it. But if price has really gone down from there, I want to see what happens a few weeks, years later. So I'll just
Yeah.
draw it just like you have done. I think it's a good idea.
Okay. That's what I was thinking too.
Yeah.
Okay. Good. So there's this one, a couple other gaps, and then this one,
Yep.
and this one. This is the same thing as what we talked about here, where I had this one as a supply zone, so it did hit it, but it went down so sharply after that that I'm like, I would like to keep it just to see that it was a supply zone.
Yeah. This is a matter of preference. Like you can leave the original one because it only hit it once and it really went down.
Yeah.
You might say, well, this was such a strong place, they might come back for it.
Mm,
But like I said, usually after first hit, I'm done with it. But you have to make exceptions, right? This one, like you said, it really went down after that. It was a
yeah.
sharp move to the downside. So could there
Mhm.
be additional orders, right? Could they let bulls come back, take it to that price, and then bring them back down?
Exactly.
Yeah.
And then just a couple other gaps here. And then lastly, there's one more demand zone down here, which we're kind of getting close to. So interested to see how that is going to end up right here.
Yeah.
Still decent,
So
decent space, but close enough.
yeah. So if you get, for example, if you want to trade this right to the upside,
Mhm.
if you come to the demand zone and then start to make a series of higher highs and higher lows, this is where on the pullbacks you trade them. But you don't take it just because price touches there.
Yeah.
At least not. I don't like to take those chances, especially if you're biased to the downside. You don't want to take a chance, right? You don't want to enter at 90 and immediately price goes to 80.
Yeah.
Yeah.
Yeah, that makes sense.
Yeah. Now, if you are a buy and hold position, it's okay to add some position at 90 because you're holding for long term, right? So
Yeah.
90 might be okay.
Yeah, that makes sense.
But for trading, I would want to see a series of higher highs and higher lows.
Okay. Yeah, so if I see a kind of just more peaks reversing from this, then this would be a potential entry position. And then also we have to have more, of course, we have to have one of our four conditions as well for the bars to be met. But yeah.
Yeah. This was good.
I can see you now. Yeah, perfect.
Okay. All right. So, I want to talk a little bit about gaps and something interesting in the markets. So, in SPYs, when we talked about supply zone and demand zone, there was a supply zone that I drew for you from a few weeks ago. And as price came to that supply zone, it blew through it. But again, this is part of that manipulation, right? It blew through it and then it went back down. Now, sometimes I look at two charts together to see what is happening. Here, we see that there's a gap. It blew through that gap, but then came back down. And if you, I believe I might have mentioned this last time. Like if I have a gap and a supply zone right next to each other, I might just keep one. And I don't necessarily have them. Yeah, the knowing that it's somewhere in that vicinity, there's some activity that I'm expecting. But why it's important that I want to show you this right now is we blew through this gap, but where did we stop? We stopped right at that supply zone.
Yeah.
Right. So you might get tempted to say, hey, we blew through it, we might be done. But remember, I said I want to see a series of higher highs and higher lows, right? For me to say we are done with this zone, whether up or down. Like for it to stop being resistance, I want to see price blow through it, make a higher low, which it did here, but I haven't seen a higher high yet. So I'm not confident that this move is done. So, but as we combine all of them, so you had a gap in the Qs right under a supply zone, then boom, we hit that supply zone and we close that gap, right? So this gap is closed. It closed it on this move on Monday. But when we get to that supply zone, we reversed. Now we have yet to see. This kind of looks like, and when you see the futures almost flat, this kind of looks like it did this and it's going to do this. This is what I'm thinking is happening because we hit that supply zone. We immediately went down, right? For anybody who was taking a very, very short term position, like on a 5-minute chart or something like that, high, low, lower, high, they could have taken this position, 272 to 269 area. This is a very, very decent move in options, right? So for those short term, but I don't subscribe to short term. as you know. But just to show you the example on how this works. So, but however, now here we see it's forming a lower high. If this now at this area of value gives me an upside down hammer, railroad tracks, engulfing, boom, you take a short-term position, right? A short-term option, stop, short position, whatever is convenient for you, you can take it because that's where the markets are heading. It's all about that confirmation, right? So, and then look at the fib retracement. In this recent move, right at 38.2 is where price reversed. Here it went to 50%. And it blew through the supply zone. It went to 50%, and boom, it went down. So you see, everything comes together, and we're not only looking at just one thing. And we always go back to the basics. The basics is our zigzag: higher highs, higher lows, lower highs, lower lows. That's what we want to see for our trading. Sideways movement, we don't trade. Like here, there's a lot of sideways movement.
Mm-hmm.
This is dangerous to trade. There are some people who can identify this and say, okay, boom, I trade up here, down here, up here, down here. But you know what? That says I can predict the top and bottom. I don't like to take that kind of chances. Because I'm the middle 70 to 80% is what I'm always looking for. And in here, there's not enough middle 70 to 80%. So there's a supply zone. We went through it right around that 50% below the. So actually, this is not the drawing that I want. This is the one that I want. But, I mean, the 50% whether you draw up or down, it's about the same. So, so 50% below the 61.8. This is where we reversed at that supply zone. Lots of manipulation. Blow through supply zone. Bulls will say, "Hey, we just blew through the supply zone. Let me exit." And then this is why yesterday we talked about this, and I said a price is going to reverse, exit some position. Because
so do you think now that supply zone is pretty much done with for our purposes?
Yes.
Okay. So then the resistance.
If you want to redraw that supply zone, it's up here.
Yeah.
Right? It's a new supply zone.
Yeah. This is also a very tight range right here as well.
Which one?
The new range that we have between the two supply zones, you're kind of getting squeezed there.
Between these two?
I guess you blew through the second one too, right? Would you count that?
This one is done. I just leave it until we have this session, right? I just leave those so you can see. So we've already blown through. Right? This was a supply zone. We've already blown through it. Mm-hmm. So now we have one up here. But again, I'm expecting price to maybe come touch it and come back down, continue this lower highs.
Yeah.
Because I'm still long term for the, not long term, but for the short term, I'm still bearish biased. I don't think we're done making our downward move. I think the markets are just tricking us, right? Look, we have a high, wild move down, wild move up. Trick people. Wild move up, down, wild move up. Trick people again. Wild move down, right? Wild move up. So you have to take this into context. House price moving wildly on either direction, but our trend line is not broken, right? Our trend line is not broken. So keep all of that in mind when you're looking at these. If the trend line is not broken, then I'm not interested in betting the farm, right? Now, if we come down to demand zone, we come down to pre-COVID high, it might be time to load up. We come down to COVID low, which is down here, this demand zone, it might be time to bring dump trucks, right? Multiple dump trucks.
Yeah, that makes sense.
Yeah.
That would be a crazy day. I think if we see it
Oh,
down back to the
man.
coast, I don't even want to know what's gonna happen.
I just wish I have enough cash left from, all this temptation here to load up, right? There's a lot of temptation to buy here for a long-term position, especially when we come to pre-COVID high. That was the all-time high pre-COVID. When price come down here, there's a lot of temptation to buy.
Mm,
But if we're not fully bearish yet, right? I think,
yeah,
you know, what I wish is to remain above pre-COVID high and just keep going to the upside for not for my trading, but for my long-term investments, right? I want them to go back north. But most likely we could come back down to the 61.8 to the 70% area. So there's a lot of temptation here to load up. And if we get down here, we might not have enough cash left over.
yeah, that makes a lot of sense. I hope that would be the. I mean, if that's the case, I think that would be very fortunate, especially for us that are kind of early in our trading journey. That's definitely a really great opportunity, I think, to have just some huge wins potentially. In that scenario, would you go in with options that have long-term expiration, or would you go in with just stocks?
The problem with options, they expire,
Yeah.
right? And I don't like options that are too far out.
Oh, really? Okay.
Yeah, so for you to make good money on these when they come back up to the 460 area, you have to give it a year.
Mm.
And those are pricey. So
You think
I
that would be better with an option because of how much in the same time period it would increase? Or do you think it's kind of one of those things where you're like, it's not really worth it? I'd rather just buy like a derivative or something that moves, twice as fast or three times as fast or three
I
times.
think, like I said, I only like to trade options. I don't like to invest in options,
Yeah, that makes
right? So
sense.
yeah, so that's so it's hard to say that options will give you a better return. They could, but that my time horizon could be a year, but the markets before they make the move that I want might take them a year and 1 day, and my options have expired.
You don't think it would still significantly be on the way there, and for whatever leg has moved until that point, you still make way more than if you were just to buy the stock on its own?
So why not just trade it? Why buy expensive options when you can just every month just trade those options? Because
Mm.
it's you're waiting for this move. I'm saying if you want to trade options, trade this move. Every dip you get on the way, trade it. Right? You'll end up making more with options this way. This one is very, very expensive. It's extremely expensive. Like, if you take SPY, I'm going to look at the option price for you. If you take SPY today and you buy, let's see, 2024 is a year out, right? So if you buy the January 19, 2024 at the money option, which is the 390, it's $42. It's going to cost you $4,200 per contract.
Yeah, that's pretty pricey.
Yeah, it's very pricey, and for you to make money, it has to be 390 plus 42. It has to go to 430. So for you to make money, price has to be here by expiration. But as it's going up, of course, it will increase in value. If price just keeps going up, the delta right now is 60. So it will increase by 60 cents for every dollar move in the SPY. So if it goes in the right direction right away, you can exit that position quickly. But if it starts to go down, and you're going to lose 60 cents, for every dollar move.
Yeah.
And for that kind of option pricing, I might as well just do short term. I trust short term options better. And I can control those better. Again, it could be, somebody might say 4,200 is not a big deal. I'll just do that. But for these, I prefer, like, for as an investment, right? Like I said, I don't invest options. I trade options. As an investment, I buy the stock. If you're buying the stock to trade it, then you can consider options.
No, that makes a lot of sense.
Yeah. And so knowing these zones is quite important because you see them play out, right? We just saw some good examples today.
Yeah.
They play out, and when they play out, you take advantage of them, right? You hit the supply zone. See, this one, I said I remove it. Always, there's exceptions. This one I don't want to remove it because I want to see what price does, right? Does it use it as a lower high resistance and it's gonna shoot down, or is it time for price to move up? And look at this one right here. Look at this whole box.
Yeah.
This whole box right here is consolidation.
Yeah.
Right? It doesn't look like consolidation, but price is staying within this confines right now. These lows, these highs. So that's why I'm a little bit more cautious. And since I'm biased to the downside, like I'm like, oh yeah. I want Qs to make a new low. I want Qs to come down to the October lows.
Yeah. That'd be still pretty significant from where we are today, right?
Yeah, those October lows.
15-20% from.
Yeah, 254 from 272.
Okay, so
How about 10%? A
10%?
little
Yeah.
bit less than 10% from here.
Yeah.
Still, that's a long distance.
Yeah. Definitely. Especially for
But
just, yeah,
it's a buying opportunity.
both
So
on the way
from the
down.
fibs,
Yeah.
see the exit for the fibs, exit one
Mhm.
is at 250 ish.
Yeah.
That's your exit one because we are hitting 38.2. If this makes a lower high, we get an inverse hammer. Boom. This is a fantastic option play, short term, right? It's beautiful move. Look at this. So let's use all of our trainings. This move here, measured from here, it it could
Oh,
come
is it
down
hidden
here.
right there? I see it right there. Yeah.
Yes, right there, right? This move, if you measure it from right here,
Yeah.
then you have other moves you can measure, right? This move here, from here, we can come down here.
They're right around the right below, slightly below the previous low.
Yeah.
Yeah. Makes a lot of sense.
This one you don't actually see.
Yeah. Where is it? Is it too much of a move? Is that why you can't see it?
You see it? You see it move now? Look
Oh,
at
I
the
see
bottom
it.
of my screen.
Pre-COVID
Yeah.
high. Yeah.
Yeah. That's where that target is,
Mm,
right?
yeah. That would be a big move.
Oh man, that's a crazy move right there.
Yeah.
Yeah.
And if you look at it, it hasn't even. It's not even that long. It's like in a 2 week span.
Yeah.
That.
It's from December 12th to December 28th.
Yeah.
Yeah. 20 days.
Wow.
Yeah. So no, not even quite 20 days.
Yeah.
So that can happen very, very quickly.
Hmm.
And
How would you? Oh, sorry. Go ahead, V.
yeah, go ahead. How would you what?
I guess in this kind of time, how would you kind of think about timing for options in terms of like how the expiration and everything?
Uh so if you get, remember, it's all about stacking the odds in your favor.
Mm,
So
yeah.
the fibs are telling you to enter your chart pattern, or your candlestick pattern is telling you to enter. When you're convicted to enter that position, initially I would say do it at least not this Friday, the following Friday expiration.
Mm, okay.
Just give yourself a little bit time. It's a little bit more pricey, but it's
Mm,
not that much more pricey. I mean, I guess it's all relative, but
yeah.
if you do uh, what's next Friday, 13 plus 7, the 20th. If you look at the SPY, the 28th 390 put is 495 per contract.
Mm,
If you were to do it for this coming Monday, is 436, right? Not
yeah.
that much of a difference. Now, if
Yeah.
you do it for 3 days, like if you had done this at the close of today, it's 400.
Mm.
So I prefer to give myself a little bit of time.
Yeah.
But if you have the conviction, and then the next thing that you can study is when I place a trade, and when I look at all my journals, how many days does it take? Right? You have to write down your entry to exit days. And
Yeah.
here, if you say, in 3 days, price significantly moves in my favor, then you can go 3 days expiration.
Yeah.
Right? So that's where the journal learning comes into the picture. But this
Mm.
is good one because all these moves, they're significant moves. Not as big as this one, but they're significant moves. All these down moves, look at all these down moves. They're very,
Yeah.
very big moves. And you don't need to capture all of that move, right?
Mm.
You will easily double that position in a couple of days. You don't have to wait for it to go all the way down here.
Yeah.
When your account size is big enough, then you leave 3 contracts to let it play out after you've accumulated enough from your initial position.
Mm.
Yeah.
Right. Well, that makes a lot of sense.
Yeah. All right. Let's
Awesome.
wrap it up for today.
Okay.
I think it's been good.
All right. Yeah. Thanks, Vinny. So good.